Hello, everyone, and welcome back to the discussion of today's Tesla stock. Despite its recent sales declines, analysts currently believe that buying Tesla stock is a good investment. One of the biggest EV producers in the world is Tesla. Profit margins have lately risen, which has enhanced the company's capacity to turn a profit. The balance sheet for Tesla appears to be solid. These liabilities are covered by a modest amount of long-term debt and sizable cash reserves. Nevertheless, there have been changes in the price of Tesla shares due to a number of variables, most notably Elon Musk's contentious $44 billion Twitter takeover. Other experts, however, contend that the recent stock decline has concealed a number of important advantages to the Tesla story and the future prospects connected to it, including a compelling entry opportunity. A recent tech sell-off, growing recessionary fears, and manufacturing problems with COVID-19 at its Shanghai factory have all had an effect on the stock price. Concerns regarding revenue and EPS growth due to escalating competition and rising expenses, as well as Musk's stock sales to fund his intended acquisition of Twitter. Experts agree, including self-described Elon Musk fanboy Leon Kogan, who has emerged as the third-largest Tesla investor. He responds by saying that the market has unjustly punished Tesla and that these factors are masking a number of important advantages, including exceptional operational and financial performance, future production growth, the recently opened factories in Austin and Berlin, dramatic balance sheet developments, and an impressive pipeline of new products. The stock of the automaker is still down more than 30% for the year after all. Additionally, this occurs at a time when demand far outstrips supply, and the company's deliveries of automobiles are expanding significantly. Because the stock's price-to-earnings ratio has decreased over the past year, the pricing is likewise more attractive. Due to this, Leo thinks that now is a good time to get a Tesla. Additionally, a 38.5% YTD share sell-off has created a tempting entry opportunity, and analysts regard Tesla as a clear winner with the potential to disrupt markets, gain market share, and have long-term stock performance comparable to Apple and Amazon in the 2020s. A financial commitment with long-term growth potential comparable to recent digital disruptors like Apple and Amazon. According to experts, one of the market's most exciting growth stories has provided a very alluring entry point as a result of the stock sell-off. As a result, analysts believe that Tesla is an excellent investment at the moment. To determine whether shares are currently attractive, let's examine the growth stock, its valuation, and the core business valuation. Increasing earnings and sales. Even though Tesla's stock has fallen this year, the company is still operating normally and doing rather well. Deliveries grew 68% year over year in the first quarter. This was driven by an astounding 69% rise in production, which is a remarkable achievement given the global supply restrictions the automobile industry faces. In order to pass on rising expenses, Tesla has also been able to hike prices during this inflationary time. Tesla is well positioned to withstand a coming recession. Experts estimate that at the conclusion of the quarter, it had $18 billion in cash, cash equivalents, and short-term marketable securities. Why is Tesla currently a wise investment? Due to its recent spike in earnings, the electric car company's P/E ratio has fallen far more swiftly than its stock price. Although the stock has climbed by 15% over the past year, Tesla's P/E has declined by 85%. It is currently under $100 and has decreased by roughly 55% so far this year. Even while at first glance a P/E of almost 100 can appear exorbitant, experts should realize that when they buy shares today, they are investing in a company that is growing quickly. The management of Tesla expects not only a 50% rise in vehicle production this year, but also an annualized growth of 50% over the next few years. Furthermore, the company's recent outstanding developments in a challenging time for manufacturers lend credence to management's upbeat outlook. Additionally, the fact that most new vehicle deliveries take 3 months or longer indicates that there is a clearly significant demand for the product. Yes, Tesla has some challenges this year. Given that the supply chain issues in the automotive industry are anticipated to persist into the upcoming second quarter, it's probable that the corporation won't be able to raise deliveries sequentially. It is also impossible to forecast the location of the stock's near-term bottom. However, the price of shares is currently sufficiently low. There is a decent likelihood that investors will regard the current price to be alluring in 5 years, said an expert. Smart investors would wish to take advantage of this, since Tesla is likely still in its early stages, according to the company's present business pace. This is 36. Culture Bughoon, a veteran of the market, explains why he thinks this is the ideal time to purchase a Tesla. He will discuss some of the factors that contributed to his high level of optimism towards the EV behemoth this year. The businessman established the Action Nitkov YouTube channel, which basically translates to investment with intelligence. Since starting to make videos about stocks and investing in 2013, the 36-year-old has amassed more than 300,000 subscribers, making him one of Germany's most well-known stock market bloggers. This man also runs a variety of other companies, including YouTube channels and online magazines that discuss topics like taxes, insurance, and real estate. Birkin has been investing 5,000 euros in stocks before he starts investing significantly. Since the start of 2022, that amounts to $5,500 in Tesla per month. Bargum claims that the business is currently interesting and in a phase when it is generating increasing amounts of earnings. Additionally, I believe that in the future, Tesla's corporate worth will increase much more. His goal is to use a monthly savings plan to acquire firm shares for a total of $130,000. He plans to make an investment of $5,000 every month for 2 years. His strategy is based on the cost average impact, which happens when investors regularly and repeatedly invest a predetermined amount of choppy stocks. Since more shares are automatically purchased when prices are low, timing errors can be avoided. As a result, savings plans may do better than one-time investments. As a result, he opts for a recurring investment plan involving a small amount rather than one that involves a significant amount all at once. However, utilizing the cost average does not ensure success. For instance, fewer and fewer shares will be bought if a stock climbs steadily over a long period of time. In part because of its CEO, Elon Musk, Tesla will succeed in the long run, according to Bogan. In addition, he noted that he was confident Tesla will within a few years more than treble its yearly car sales. Colgan believes that this is the key factor making this the best time to purchase a Tesla. The secret to choosing Tesla and the greatest EV stocks is to buy the best EVs. The car industry is currently experiencing tremendous challenges and changes due to the oncoming wave of new electric automobiles. Even EV industry leader Tesla has been susceptible to the bear market. However, for savvy investors, falling share prices can represent an opportunity. Some investors are pondering if this is a good moment to invest or if they should pass on it in light of the low prices at which companies like Tesla and others are now trading. Despite the fact that demand was high and Tesla's first quarter sales surged by 87% year over year, the company's stock is already down over 40% from its peak. However, despite the company's parallel price increases, Tesla's output only climbed by 69%. The announcement comes as Tesla's Giga plants in Texas and Berlin officially open, which should help output increase even further. Despite this, the company has been able to grow its revenue more quickly than its output growth. Investors can take heart from this since Tesla's price-setting flexibility has actually contributed to the industry's rising demand. However, because the market is still young, there is still increasing competition in the vehicle sector. Demand for EVs is not just confined to Tesla. Rivian and NIO both posted losses in the first quarter, just like Tesla did in its early years. Experts estimate that the erstwhile automaker lost $1.45 billion in revenue in the first quarter. Tesla and NIO might be fantastic investments right away. Rivian's production capabilities, however, still need time to prove their value. There is no doubting that Tesla has scaled production unlike any other EV company now in existence, and that the production processes are already drawing plaudits from investors, making both of these clear buys in the near term, at least in the fool's opinion. It's crucial to remember that the majority of these automakers have goals and company plans for the next 5 to 10 years. Even Tesla took some time to start making money. It may make sense to buy Tesla stocks now while they are still reasonable. If investors are willing to wait the several years it will take Tesla to expand its EV manufacturing and start making money. Top EV stocks are available for buy or observation. The listing of the majority of EV stocks is currently facing additional pressure as a result of many large damages sustained last year. Generally speaking, electric vehicles, which are still regarded as a nascent sector, are drawing speculative wagers from large manufacturers as well as small entrepreneurs. They have been harmed by the current market's risk-averse mindset and persistent shortages of crucial components. The stocks of electric vehicles listed below exhibit the best coordination of fundamental and technical signals. Stock Eyes, Li Point bought new EV is coming. Li Auto's stock has a comp rating of 95 and an EPS rating of 76. One of the IBD 50 fastest-growing stocks was Li Auto, after a recent decline and a 6-week winning streak. The LI stock was able to recapture significant moving averages on June 23. This was made possible by a 55% rally thus far in June. China's EV equities have also been hurt, among other things, by worries about delisting and supply interruptions. Like the majority of stocks with a Chinese foundation, Li Auto trades in American depository receipts. The Chinese electric vehicle firm is selling the Li 1 SUV. The Li 1's electric range is extended by a tiny gasoline engine. The L9 SUV, Li Auto's second model, made its debut on June 21 after being delayed due to COVID shutdowns in China. EV sales climbed by 176% as compared to April Li Autos. Li almost tripled EV sales in 2021 in May. Although sales growth in the triple digits is still present, consistent earnings are still some time off. BYD Tesla is mostly held by the lithium ETF in 2021 and 2020. After topping in November, the global lithium and battery technology ETFs are currently in a significant uptrend. The LITS quickly rebounded from its lows in April and is currently back over the 10-week average out of a possible 99, whereas the ETF quickly declined. It is rated as having a 79 relative strength. This shows that it outperforms 79% of the stocks in IB's database over the course of the previous year. Albemarle, Tesla, and BYD of China are among the top holdings in the lithium stock ETF along with battery producers. Additionally, the fund invests in refiners and miners of lithium. Most contemporary EVs employ lithium-ion and lithium iron phosphate batteries. According to experts, these are the greatest EVs currently available, and now is the ideal time to get a Tesla. Click on one of these two videos on your screen while you're here. Hello there.